How's it going, everyone? Today we're going to be looking at SoFi stock, which is up 32% over the past month. And we got a new research note coming from Truist, as well as a price target upgrade. We're going to take a look at that, as well as what you can expect going into this upcoming earnings report, which is coming out this coming week. So, a very big week ahead of us. But let's go ahead and look at that research note here. SoFi Technologies price target raised to $20 a share from 14 at Truist. So, a Truist analyst, Matthew Code, raised the firm's price target on SoFi Technologies to $20 a share from 14 and keeps a hold rating on the shares. Truist likes to set up for the fintech sector as earnings results in totality should be solid, and the group has underperformed of late, the analyst tells investors in a research note. So that's a very good sign. We're getting a price target increase from Truist. I very much like that. One thing you should know going into this earnings report is that we are very much at the peak of our current valuation at SoFi. The current PE is around 50, which is a very high valuation for this stock. It was at around 30 over the past 2 months. So this is very much on the higher end of the valuation of this company going into earnings. So that's one thing to expect. If we have any sort of miss with earnings, you're going to see a pretty big sell-off with the stock, but hopefully that doesn't happen because this stock has been performing extremely well. And we're going to look at this updated fiscal year 2025 guidance. They improved their guidance in their most recent earnings report, and we're looking at 24 to 27% revenue growth over the year. And we're going to also see net income of 9% year-over-year growth, which will be very solid. Diluted earnings per share should be somewhere in the range of 27 to 28 cents over the fiscal year 2025, and that would be an improvement from 15 cents earnings per share in 2024. So that would be a great improvement for SoFi. And you can see Q2 2025 guidance. We're also looking at applied annual revenue growth of 31 to 35%. And we're going to see net income growth hopefully between 8 and 9%. So we should be expecting $60 to $70 million in net income, which would be very solid. Now we can see here we've got latest quarter's earnings and also upcoming quarter's earnings. So we had a double beat in the last quarter. They beat on earnings per share and revenue as well. So we're expecting EPS of around 6 cents, as well as a revenue estimate of $804 million. And we've had no revisions according to Seeking Alpha over the last 90 days. So we should be somewhere in the 800 range for revenue. That would be phenomenal. Now, again, understand that if there's any sort of miss in earnings, this valuation is going to crush the stock. So that's something you have to understand if you're trading this earnings coming up, that this PE is going to be difficult if there's any sort of miss on earnings. So we really need solid earnings, and those earnings are coming out July 29th pre-market. So those are coming very soon. Now, I do own SoFi stock. Just a disclaimer, I am up 54% on my SoFi stock, and I have an average position of 1375. So I'm a holder of this company long term. I very much like the company and what they're doing. I do think they have an opportunity to disrupt the financial industry, and I'm a big fan. I really like what they're doing as a fintech company, and I would like to see them follow in the footsteps of Robinhood, but also be a bank. That's the big selling pitch of SoFi, is that they're a bank that has cut down their costs by being an online bank. So I'm all for SoFi. I love the company. Their CEO, Anthony Noto, is also phenomenal CEO, and I have big expectations for the company. Now, as far as the analyst ratings go, 30% buy, 48% hold, 22% sell. And I think the analysts have been very wrong on this company, and that's why you're seeing these price target upgrades coming very late in terms of the growth cycle that SoFi's had. They're very much behind the curve on this company. I don't think they've been very accurate at all. And you can see that with companies like ARK, Kathy Wood. She's been buying SoFi stock at a higher price than when she sold it, last year and earlier this year. So the analysts have not gotten the stock right. They haven't gotten the company right. And I think that they're just now starting to hit the real stride here in terms of earnings. And I think that if you pay attention to the numbers and the guidance, that's going to be the most important thing. Obviously, we invest in fundamentals. We invest in good companies, not stocks, not stories. We want good companies. And I think that's what you're getting here with this company. And hopefully this will be a great earnings report, and we'll see what happens. But let me know your thoughts in the comments if you have a differing opinion or if you agree. And if you got value from the video, consider subscribing. Y'all have a good one.